Crypto. All the crypto news in one place.
So that is that, guys. Now let's take a look at the Bitcoin market sentiment fear and greed index. As we can see today, it is at 48. It is back to neutral. And when last time we saw such a number, well, 48, we will have to go back all the way to October 2025. This is when, guys, Bitcoin was like $120,000. Now we are at 97K, and the market sentiment, it is more or less the same. And yes, it does make sense because market optimism increases relatively, because it is a recency bias, because Bitcoin was lower, whatever the number was, $86,000 a week ago, 2 weeks ago. Now we are relatively higher, so people feel a little bit more optimistic.
So yeah, Bitcoin is really the story, I feel like, over the last 24 hours for sure. It's had a notable breakout. It's set a new sort of daily cycle high, and things are looking really good. So I wanted to kind of talk a little bit about what's leading to this, what's contributing to this, and where I think we're headed in the next week to 2 weeks. You know, what I see in terms of potential resistance levels looming out ahead, and yeah, there's a lot going on for sure.
Fantastic. Yeah, Bitcoin it had a pretty nice breakout. Though we haven't pulled it up on air just yet, but I'm looking at this Bitcoin chart. That's a beautiful looking candle right now. Why don't we dive into it and see what you're seeing in terms of this little breakout we have going on?
So yeah, definitely a technical breakout for sure. Like we broke out above this horizontal level here.
Second, I would say, as it relates to Bitcoin's 4-year cycle, which to a degree overlapped with the money supply issues and treasury cycle that I mentioned, I was never a huge believer. You couldn't deny that there were a few data points that clearly said we were in this kind of, sine wave cycle based upon the halvings, but the samplings were just too small, right? And so I didn't really care so much about that. I really cared more about the fact that you had limited supply. You had effectively a deflationary asset that's being priced in an inflationary asset. When you have those things and you have reasonable demand, and you're continuing to price something in the inflationary asset, which is the dollar, the price of the deflationary asset has to go up over time. It just does, right? And that has to, but by all viable measures, it's going to go up over time, and that continues to play out. That has been my core thesis for why Bitcoin is my personal beta, and anything I do in L1s, those are venture bets for me. Those are long-term bets. They could go up 10x this year. They could go up 5x over the next 5 years. It's all good. Those are venture bets based upon a core thesis that I have around the value of block space plus smart contracts, plus decentralization.
You say this is part of a shift due to how the world is just viewing monetary risk and geopolitics. What is the shift that's taking place, and why do you think Bitcoin's benefiting?
Well, Bitcoin benefits really from global liquidity primarily. So if you think about markets right now, you have U.S. government increasing liquidity, interest rates have come down. You have other countries also increasing liquidity. And Bitcoin operates in two particular worlds, the developed world and the developing world. In the developing world, Bitcoin is really a hedge against the decrease in value of local currencies. You can see what's happened in countries like Iran, Turkey, Venezuela, other countries like that, where their currencies have been debased, and it's a great way for people to hold value against that debasement. In the US and the developed world, it's more of a store of value, and you've seen now banks come into the market.
So what's the view for this year? Bitcoin still on the cards?
So we only took a 1% exposure to Bitcoin in our fund. And our fund is a little bit more adventurous than our sort of core profiles. The Bitcoin model, so when you look at what really matters and what predicts quite well whether Bitcoin's going to do well or not, at the moment we've got a 29% score on Bitcoin, which is very bearish. Now, Bitcoin has done so well in the last 10, 15 years that with that sort of low rating, looking at the history, it's made some money, but it means that we're not really going to be shifting for our 1% exposure for some time. If that starts getting more bullish, we're going to slowly deploy that and take it out across our other portfolios. But, you know, the sensitivity to NASDAQ, growth stocks, liquidity is still there.
I think every cycle sort of seems so similar to the last, but then there's deviations and shifts and nuances just enough to like make them maddening every single time. So every single one seems sort of the same, but then every single one seems different at the same time. And as an investor, it just can be so turbulent. So one thing that happened this year that, you know, has been talked about a lot is Bitcoin dominance just stayed structurally high almost the whole year. And that sort of feeds into, we never really saw the altcoin rally. Like, it never showed up. And I think this is one of the patterns that people were expecting to play out that just never happened. So in typical cycles, we get it top in Bitcoin dominance. I think last cycle, don't quote me, but it was in the 70s, so about 70%, 72, something like that. This cycle we hit 66, but I think we're still at around 58% Bitcoin dominance. So we never got that crash, and Bitcoin just stayed strong pretty much the whole year.
Former NYC Mayor Eric Adams launches a meme coin that hits 580 million in market cap before crashing 80% in a matter of minutes. Nearly 500 million in market cap has been lost since the post-launch peak. Now, you will see this post down here saying like this is an old post. However, it's actually not. We have over here from Eric Adams. This is a post from January 12th, 2026. We're about to change the game regarding NYC token. We have here, from community notes, former Mayor Adams immediately withdrew his liquidity from the coin in what a typically called rug pull. And if we go back over here, we do have the update on chain. This was minutes ago on January 12th. This happened. $3.4 million completely removed out of liquidity. I mean, this is just absolutely insane. So this was not a brand new thing, or this was not an old thing. This is a brand new thing that has happened. And again, this is just another big blow to crypto, which keeps retail on the sidelines.
Okay, moving ahead. Bitwise lists Bitcoin, Ether, and Solana ETPs on NASDAQ Stockholm. We all know crypto is a global asset class, and these companies are building the bridges, the on-ramps for people to access the asset class around the globe. So this is very good. This is what you want to see. More capital coming in, more participants, more building, and of course, network effects will play out here. We've often talked about network effects over the years.
Now, Patrick Witt, he said a compromise had been reached. This was last night. This is going to be around 6 p.m. He says a compromise had been reached on the stablecoin yield issue. And this was past the deadline for the text released by the banking GOP. Reports today suggest some Democratic offices still unsatisfied with the compromise, including a ban on yield for your account balances. Remember, the big banks do not want you getting yield for your stablecoins, for your crypto. And I found out the exact reason why. JP Morgan released earnings this morning and reported $25 billion, not in net income, interest income. They made $25 billion, TJ, off of interest. And people are wondering, like, no, it's about safety. It's about, giving options. It's not at all. They want your yield.
Yeah, it's about terrorism. It's about all these other things. And no, it's about profits and money.
What? Oh my God, this is crazy. We're going to get into what is actually happening, all of the news. I'm going to try to get this video out today if possible. I'm recording this in the afternoon. It is 2 p.m. here on Wednesday, January 14th, and this news is coming in by the hour, and it is changing. So by the time this is edited and you see it in a few hours from now, things could be different. So please just understand that and bear with me as I try to get this information to you as quickly as possible. So here's Brian Armstrong. After reviewing the Senate draft bill over the last 48 hours, Coinbase unfortunately can't support the bill as it is written. There are too many issues, including a de facto ban on tokenized equities, DeFi prohibitions giving the government unlimited access to your financial records, and moving your right to privacy. That is awful. Erosion on the CFTC's authority, stifling innovation and making it subservient to the SEC. Haven't we learned our lesson here? Draft amendments would kill rewards on stablecoins, allowing banks to ban their competition. We appreciate all the hard work by members of the Senate to reach a bipartisan outcome, but this version would be materially worse than any current status quo. We'd rather have no bill than a bad bill. Hopefully, we can get a better draft. We'll keep fighting for all Americans and economic freedom. Crypto needs to be treated on a level playing field with the rest of the financial services.
Just since Tuesday, more than 225,000 emails have gone to Congress just about this rewards issue. And just to the Senate, I want to be precise about that. 225,000 emails just to the United States Senate about the rewards issue. That's almost 500,000 since this started to come to the forefront back in October. That is a lot of everyday people coming to Senate and saying, we care about this issue. Please don't gut our ability to make our money work for us.
Hey everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan. And yes, that was the vice president of the U.S. policy at Coinbase. 225,000 emails. Can you imagine?
Please do not interpret this video to be anything other than that. It is not a promise, promotion, suggestion, recommendation, or guarantee of any kind. It is simply you and I talking about crypto, going over the latest news. So let's jump into the latest news. It says that Ripple secures a preliminary license approval in a European country. The price of XRP climbed roughly 3% in 24 hours as Ripple secured a regulatory license in another major European country. Ripple announced on January 14th that the blockchain technology and the crypto company has secured a preliminary electronic money institution license approval from Luxembourg's Commission. It says the CSSF is a regulatory body in Luxembourg that oversees the financial sector in the Western European country. The latest development is a pivotal step towards scaling Ripple payments and bringing institutional-grade digital asset infrastructure to the European Union, the company said. It was only last week that Ripple secured the EMI license and crypto asset registration from the United Kingdom's Financial Conduct Authority, and the FCA regulates financial firms providing retail and wholesale access to customers in the United Kingdom, with offices in London, Dublin, Luxembourg, Geneva, Reykjavik. Ripple provides enterprise-grade digital asset solutions to several financial institutions in Europe.
Iran closes its airspace to civilian traffic as loud explosions are heard in Tehran. You can see right here, full screen it, so we can take a look at the airspace above Iran. It is completely empty. And we do now have confirmation, multiple reports of fighter jets over eastern Iraq and northern Israel and southern Syria. The strikes may have started, but we won't hear about them till later due to the internet blackout in Iran. We have Starlink trying to beam down and give them some internet access down there. So we're going to see when the reports are confirmed. But this is going to be a live update situation throughout the rest of the night. Earlier today, 8 American military fuel tanker aircraft depart from Pearl Harbor, headed in the direction of Iran. So we've been positioning. We also have an account on Polymarket, and this is disgusting to me.
We have from Young Hoon Kim as well, highest IQ holder of 276, also telling us that the next 24 hours matter. And you guys might be wondering, what are we talking about? What's happening in the next 24 hours? Well, we do have a big warning, and that is 2 major events happening. The first one being the Supreme Court tariff ruling happening at 10 a.m. ET, and we have Polymarkets pricing about a 71% chance that the court rules Trump tariffs illegal. And so if that happens, we will see the market instantly starting to think about refunds on the $600 billion plus Trump keeps talking about, right? So this will add uncertainty for the markets, and so we could see a dump coming in for the markets if we do see the Supreme Court deeming as Trump's tariffs as illegal. But as Zach Rector has said, if we do see the Supreme Court approving the tariffs, we will see the markets moving up.
So let's go over to Jerome Powell now. President Trump says Fed Chair Jerome Powell will be replaced soon. That jerk will be gone soon. That's what he said.
Drop below 6% for the first time in many years. It's coming down very rapidly, and that's not with the help of the Fed. If I had the help of the Fed, it would be easier. But that jerk will be gone soon.
So this is after, you know, the Federal Reserve, Jerome Powell, had this renovation thing for $2.8 billion that everybody is up in arms about. It's ridiculous. I mean, the distractions are incredible. It's kind of like this. Imagine you get angry at your partner for spending $5 and think about it. You're a millionaire and you spend $5 and somebody gets really angry at you and just stays angry for what, a couple weeks at you for spending $5, wasting $5 on something that didn't need to be spent. That's the equivalent of the Federal Reserve spending $2.8 billion on renovations. That's it. That is how ridiculous it is, considering that they are printing like multiple times that every single day out of interest, and the interest on the debt is ridiculous that you're going to be having to spend, especially if you're a US citizen. You owe interest on that debt and you're going to pay that through taxes and things like that. This is how stupid this is. So let's not pay attention to this, realize this is a huge distraction.
The Fed has never been independent. You got a $38 trillion indebted, drunken country that is addicted to spending money. And you think the people that set interest rates is independent? I mean, like, be a serious person. Are we able to pay back what we've borrowed based on the growth we're producing today? When you have a number that's over 120%, the answer to that is overwhelmingly no. We have zero chance at paying back and making whole on the $38+ trillion worth of debt we've accumulated. And by the way, the cost of interest on our $38 trillion, well, it is over 100% of our receipts, of our revenue. So when you have debt to GDP at over 120%, and when your interest expense alone, guys.
So if we're taking a look today at liquidity, economy, institutions, what's happening in those sectors? Well, this is a great reminder from Kobeshi letter. I didn't realize it was going up this much. US M2 money supply jumped 1.65 trillion in 2025 to a record $26.7 trillion. Now, everybody talks about how important liquidity is, and I agree, but I have to ask myself is, how much liquidity do we possibly need? We're at a record 26.7 trillion. Those funds should be flowing into crypto a little bit more. That's my personal opinion. Maybe I'm just a little bit biased. I guess I would be, since I have a channel called Digital Asset News. But it is just perplexing to me, the amount of liquidity and not the amount of inflows that we should have. Anyhow, this marks the largest annual increase since 2021. I don't know if you remember this thing called the coronavirus. And back then we printed money like crazy. But this is the largest increase since that time frame.
We're waiting on legislation. We're waiting on Clarity Act. We're waiting on tariff Supreme Court rulings. Again, faked out today. We were supposed to get a ruling today. We're always waiting on headlines, like for years now. And I'm absolutely so tired of doing that. Because at the end of the day, these aren't the things that even move the capital at scale that we want. It's things like PMI. It's things like the business cycle. Indicators like Russell 2000 breaking out. These are the things every cycle that have moved. And in those like macro environments of crypto moving into bull markets, there were like bullish things happening from a headline perspective. We're waiting on small caps to break out. That's what we're waiting on. And that includes Russell 2000. And over the cycles, that has been a very just simple indicator of business activity expanding. That is the Russell 2000 because it's made up of small caps. And then that rotates and translates to crypto. This is why we see when that environment presents itself, we have gold and silver topping out and the rotation begins.
I also believe that we're seeing unprecedented amounts of liquidity that is going to be hitting the tape here in 2026. We know that for sure. So we have a tale of two cities. However, I want to be very clear that the way in which we are getting that added liquidity is very much so indicative of creating a sugar high here in the economy. And we're going to talk all about that in just a second. Okay? First and foremost, we are now in this housekeeping zone. And as you can see, I have it labeled here. It started at the yearly open 94,000 and it goes up to about 100,000, which is just below the 50-week moving average, which is coming in at just over 100,000. Now, it could go slightly higher than this to 107 before we see in complete collapse. If we are going to see a collapse, you could see something in around the realm of this, where you could see Bitcoin go up to this 107, then drop. I don't know if we're going to end up turning bearish. I certainly hope we're not. And I think there's a huge possibility that on the macro, this was just another higher low, another macro higher low in this channel that we've really been in since the start of this institutionally driven Bitcoin bull market back when the ETF news came out in August of 2023.
The next thing that has changed is that the RSI is back over 45. Now, that's not a, you may say, okay, well, that's just RSIs and it's just chart levels, but this is a very significant chart level. The reason why this is a very significant chart level is because every time in a bull market, the RSI stays above 45.
Now, many of you guys will already be familiar with MVRV, as it's pretty much an essential on-chain metric. But today, we're going to be taking a closer look at the short-term holder version of this popular metric. Now, simply put, MVRV stands for market value to realized value. And this is the ratio of the current price to the average acquisition price. And short-term holders are those who've held their Bitcoin for less than 155 days. Now, currently, the short-term holder MVRV is sitting at 0.92, meaning short-term holders are holding at about an 8% unrealized loss on average. This matters because it shows us the profit and loss position of recent market entrants, which helps us gauge market sentiment and potential turning points. Now, if we zoom out for a second and we look at 2017, and specifically late 2017, looking at December, we can actually see the short-term holder MVRV go and peak right about 2.4, and the key level being above 2. Now, this metric will trend higher when fresh capital enters during bull runs and price rallies quickly, like it did, as we can see here, in late 2017 when it pushed above 2, which meant that short-term holders had doubled their money.
So, did you enjoy the app? Let me know in the comments.